Why is the stock market crashing? Japanese carry trade, will they or won't they cut? Extreme leverage in the system, all of the above. Let's break it down a little bit. When it comes to extreme leverage, that one's pretty self-explanatory. Whether you're talking about the individual person, Joe and Jane, with their credit cards and their buy now, pay later, or your CEOs or your big businesses, everybody has more debt than they ever have before. I suppose that's all the way up to the government level, right? The ever expanding par for course, sadly. Then you have interest rates. When we finally got the jobs report for September that was delayed because of the government shutdown, we found that we had gained quite a bit of new jobs. There's less a chance for the Federal Reserve to want to cut. More concerned about the chance of cutting causing extra spending and thus more inflation because the job market appears strong. And then you have some of the Federal Reserve chairmen coming out and letting us know that there's still quite a few voting members that believe they should cut in December. And then there's the carry trade, which this one is more complicated. What I can tell you is that basically the Japanese carry trade situation revolves around extremely cheap debt in Japan, offering sometimes 0% interest rates in order for them to spur inflation. That encourages international investors to take cheap debt out in countries like Japan and then put that money into bonds here in America that are paying out something more like 4%. So we have high bond prices. Japan has low bond prices, and you have people basically profiting off the difference. So that's the carry trade. And what people are concerned over right now specifically is that perhaps they will start to have to increase their interest rates, more inflation due to their very stimulative policies right now. So if they have more inflation here in the near future, they'll have to increase the cost of their debt, which will cause people to have to sell American stocks and bonds rather in order to pay off those debts in Japan with the newly increased interest rate. There's fear over all three of these things. It's all culminating together, and that seems to be what has the stock market down. I'm getting this video out a little bit late, but it seems now that we're finally bouncing and having a relief rally. Maybe a Ukraine-Russia peace deal in the works, although this seems to be far off down the road. Maybe we will get a rate cut in December. Maybe we'll have peace. Maybe the interest rates in Japan won't increase too quickly.